This is Richard Flax at Moneyfarm with our regular monthly update. October proved to be a challenging month in financial markets. Global equities struggled while global bonds didn't provide much of a hedge. The news was dominated by tragic events in the Middle East, and as in the past, we focus on the potential impact on financial markets. The reaction there so far has been quite limited, we think, but a lot depends on whether the conflict expands beyond Israel and Gaza. The broader the conflict, the greater the impact on financial assets, and for now, this remains a risk. In terms of macroeconomics, we continue to see a pretty mixed picture. The US economy remains strong, at least based on the latest GDP release, and jobs data continues to show that the labour market there is pretty healthy. The picture in Europe isn't quite as rosy, with the Eurozone economy currently stagnant. Still, that's better than many had feared at the start of the year. On the inflation front, inflation continues to moderate, and we saw a better than expected print in the Eurozone. But central bankers are still delivering a fairly cautious message. Policy rates might not rise from here, and that's good news, but policymakers don't seem to be eager to start bringing rates down. October has also seen a lot of companies report their earnings. Again, we saw a bit of a mixed picture here. Overall, US corporates did pretty well in terms of the number of companies doing better than analysts had expected. In Europe, the outlook wasn't quite as good and companies haven't done quite as well. It's also interesting to see that companies that have shown disappointing results have seen their stock prices punished more than usual. As we head into the last couple of months of the year, there's still a lot of uncertainty around. There are still some nagging questions about whether policy rates have really fully fed through into the global economy, even if the current macro environment has probably held up a little bit better than we might have expected at the start of the year. And as we head into the end of the year, we start thinking about our strategic asset allocation process, where we look forward on a longer-term basis to think about long-term expected returns. Given where starting valuations are for equities and particularly for bonds, we're expecting to see higher returns on a long-term basis than we have in past years. But that's something we'll update you more on a later event. Thank you for listening and look forward to speaking to you again soon.